Welcome back to episode 3 of Following the Money, a Technical Trader's Outlook. Before I get stuck into it, I do have a disclaimer I have to go through first. The views, opinions, and analysis expressed in this video are solely for informational and educational purposes. They're not financial advice or recommendations to buy or sell any of the securities that I talk about. You do need to consult your own financial advisor and do your own research before you do anything. I certainly have nothing to do with it. Alright lads, I'll start with CRPT because it's already up on my screen. Clearly in an uptrend. I'll check its RSI rating. Got an RSI rating of 88. It's clearly a leader, something we definitely need to be watching. Previous highs here, the distribution area that it tested twice. Could have called it a double top, but it managed to break through that, and now it's retesting it and it's bounced off it on strong volume. If I zoom in on a smaller time frame, as it's bounced off, the volume is picked up substantially and it's formed a pivot point, because when it pulled back, that volume dropped off substantially as well. The volume pretty much died off and now it's breaking out. Now on the breakout, I wouldn't technically call it a breakout as the volume has been quite dismal. I would say this area here is the resistance, so I'd be looking for it to break out on volume. So if it did something like this, where maybe it goes down a little bit, then breaks out like that, then I would be looking at this and actually starting to put a trading plan together for it. Until that, I don't have anything I'm really planning on doing this. I'll just be watching it going forward. Now, what I really wanted to talk about first, but I've touched on this first because it was already on my screen, is banking stocks globally across the board, particularly in Australia and America, because America is what leads the market. It's clearly the most important, but I'm also based in Sydney, Australia, so of course I'm going to be watching Australian banks. Now, it's been quite a while since I've seen something like this where all of the big four banks in Australia are in technically what I would call an uptrend. They're doing quite well. Now, there's many reasons for that. One of them being higher interest rates, but particularly a steepening yield curve where the shorter duration bonds are yielding much lower than the longer duration bonds. And the reason why this is beneficial is that banks can borrow the short term and then lend out at the longer term for a much better rate as well, therefore boosting their profits. And that's starting to reflect in the bank share prices as well. So I've got ANZ on the screen now. It's clearly doing quite well in an uptrend. I'm not saying I'm going to be trading any of these, but it is good to see financial services stocks or companies doing well. Having worked in them for about a decade now, I can tell you I have first-hand experience working for a financial services company where you're coming into work every day and the share price is getting absolutely beaten down, perhaps even at all-time lows, and it's quite a stressful feeling. So I can imagine there's a few employees at these banks feeling a bit more comfortable and secure in their jobs for the meantime, but it has been quite a while since I've seen anything like this. So this is ANZ. I'll bring up the main one, which is Commonwealth Bank. Commonwealth Bank is at all-time highs. This would have been very nice to trade at some point. It's even pulled down to its 21 moving average and bounced off immediately. This is a very strong sign for the stock. I'll go NAB next. Nearly at all-time highs, still in a very clear uptrend. This right here was tradable, in my opinion. I obviously wasn't watching this, but if I go across here, very nice pivot point, up on decent volume. Look at that volume, and then as it pulls back, volume drops substantially and then breaks out clean. And if I look at the percentage on this, you're looking at a 7.5% in about a month on one of the biggest stocks in the country. Pretty impressive. I would be happy with that. I didn't trade this one personally though, paying a very good dividend rate as well. This one doing well also, similar to a lot of growth stocks that I've been charting recently, where you have an inverse head and shoulders. I will lay this out on the chart so it's a bit easier to see. Left shoulder, head, right shoulder, and then you'll have a bullish divergence on the awesome oscillator, and I'll lay that out on the chart for you as well. As you can see here, price makes a new low, the oscillator makes a new low, price makes a new low, the oscillator does not, it makes a higher low, and then price starts to tighten up and then break out and head to the upside. And typically, this is where I look for some sort of a consolidation around moving averages where I can actually trade, and then some sort of a pivot point. It looks like it doesn't want to do that because there's clearly a lot of demand to get in this. I imagine there's a shit ton of super funds and managed funds that are probably underweight in it, or desperately all trying to get in at once because it's finally starting to do well and they're all paying good dividends. And that's why it's unable to really form any sort of base now that it's finally in an uptrend, because globally, all banking stocks doing quite well. I've gone on the Australian, I'll touch on some American ones as well. And again, there's much more I can go through. There's endless banking stocks. I don't want to spend my time going through it. And I'm certainly not an expert on banks either. However, looking at the charts, it's very interesting to me. So I've got Bank of America on the chart now, very similar to the Australian ones I was looking at before, but not as good in my opinion. JP Morgan, trading at all-time highs effectively. I'll go Goldman. And Goldman's doing pretty well also. I'll zoom in on this one. Not a lot I can do with this, to be honest. But definitely keep watching these. I've got it on my watch list. Next up, I wanted to talk about semiconductor stocks, and I touched on this the first ever video that I made. Look at this. So this distribution area that it broke out of, it retested that, faded it, and struck back right up to the upside. So I actually traded this. I touched on my video that it's likely it's going to break out of this distribution area, and any sort of retest that I'm going to be looking at getting involved in it. And this is why you put these on the charts so you can watch them, and that's why you learn what fading is, which is this, where it comes down, looks like it's heading down lower, and then immediately comes back up. So sellers push it down, buyers come back in, strength comes back in, and it pushes it up. And that's why you need to be aware of distribution areas, whether it be a supply or demand area. It's effectively means the same thing, and that's why you plot those on your chart, and you keep them there, and you watch it, and you have alerts around these areas as well. Because when they come in, price comes into those areas, you need to be watching for fades, and there's so many distribution areas on so many different stocks, it's incredibly hard to keep track of. I just plot them on there and I leave it and I set alerts, and then when one goes off, then I quickly go and check it. I'll touch on NVDA now that I'm discussing semiconductor stocks, and I'll give you an idea of how I'm potentially looking to trade NVDA. As you can probably tell, I trade with patterns. It's a lot, I like to think it's a lot deeper than that, but at the end of the day, I'm looking at chart patterns and trend lines and support resistance. Look at what I've got on the screen now. If I were to zoom in to its previous consolidation, it's the exact same as this, right? So you've got this move here. How many times do we test this? 1, 2, 3, 4, 5, 6. 6 was six is what we've got now. And then if I zoom in on this one, which looks exactly the same, I'll put support here and move it up a little bit. How many did we get? 1, 2, 3, 4, 5, 6, 7 was the final one before we had a massive gap to the upside after a very positive earnings announcement. We're on number 6. We're at this point here, if you look. So we're waiting for that number 7th, which is on the 21-day moving average. It also coincided with an earnings announcement. If I zoom out here, again, 1, 2, 3, 4, 5, 6. We're waiting for that 7th pullback to this 21-day moving average. And we have an earnings report coming out in about a month, exactly a month. If it manages to pull back to its 21-day, and I can see that earnings announcement coming up, I may buy some. And this touches on a concept that I discussed in one of my first videos, is when you have a sector like this or a stock like this where it just keeps going up and up and up, and you're going to hear about it, people are going to be boasting about gains they've made, people are going to talk about all these crazy new things no matter what it is, right? And that's when the hype's the biggest, and that's when everyone piles in to buy, and you get these parabolic moves to the upside. If that is your trading strategy, you are going to lose a lot of money. I've seen it on both sides. I've seen it from being the broker, and I've also seen it as being the trader in my own personal trading. As I said, I've been doing this for over 10 years, so I've gone through this myself. But if you do find yourself desperately looking to get into a sector or a stock that's rapidly growing and you believe it's going to keep going higher, then you need to have some sort of a strategy. And one of the more simple, more successful strategies that I've seen for assets like this is waiting for them to pull back to their moving averages and accumulating around those areas. So we've seen it before with NVIDIA previously where it's pulled back, and I've just given you an example there. But another way I'll touch on Bitcoin actually, because I actually bought it right before it took off this year, and I'll tell you exactly how I did it and why I did it. So right now, Bitcoin's doing really well. Let me get rid of this shit on the chart. Bitcoin's doing very well, and when it was here, this is when the announcement came up that the ETF was approved and listed, and all the hype was in. Everyone was piling to get in, and it's immediately faded. Again, you buy the rumor, you sell the fact. And now, for the past couple days, I haven't really heard too much chatter about Bitcoin. Not as much as I heard before. What I like to do and what I did with Bitcoin before is I like to wait until I see 3 weeks tight price action on low volume around a moving average, and I'm not hearing any chatter about it. In those times is when I like to buy, and I'll show you the previous time that we had this right here. And again, it's so minuscule, it's very easy to miss. So again, you've got some big moves to the upside. Everyone's raving on about Bitcoin. You even get it again here. And then it pulls back towards moving average, and you have 1, 2, 3 incredibly, extremely tight price action, really low volume. No one's talking about it. Then I had this fourth candle, bit of demand comes in. That's where I'm buying. And that was at about 26,000. Now it's trading about 40,000. So not a bad trade. But that's how I'm planning on trading asset classes like this going forward, where they're in incredibly hot demand. A lot of people want to get involved in it, including myself, because I think it's also going to grow in the long term. But I don't want to get stuck just buying in around highs and what have you. I want to wait and have some sort of a strategy to capitalize on this. Right now, we've just had 1 week tight price action. That's one. If the following 2 weeks we get tight price action around this 21-day moving average, I may look to get in then as well. Just something to consider going forward. Next up, I got LRCX Lamb Research. I discussed this last week, doing very well, was broken out here. Didn't really trade this though, but this right here was perfect, this pivot point. And this actually adds on to my risk management strategy, where I discussed having your first take profit, where you sell half your position at the same distance to where you set your stop loss. So if I was buying in around here, let's say I bought in on this breakout, my stop loss would have been around here of 6.5%, for example, right? If I go up 6.5% to here, I would have sold half my position. That way I can't lose money no matter what, unless it gaps down. It pulls back, it retests, and demand comes right back in. I can always re-add. And now I'm re-adding when it's confirmed that not only does it want to break out and head up, but it can also pull back and strength's going to come in to actually support it. And now I'm re-adding at a much higher probability of it playing out, and I've already booked some profits and I moved my stop loss up. That's how you're able to trade. Now, you can get away with not applying a strategy like this in this market because everything's doing quite well. When markets go to shit, this is why risk management is so important. This isn't the only way to do it, but this is something that I've been using and it's worked for me. Next up, I have CAR or CAR. Very similar to what I discussed before. You've got a breakout, pull back, and it's heading back up to the upside. I'm definitely watching this one going forward. TUA, so previously it broke out and did about 50% in about 2 months, which is pretty good. And now it's pulling back and no one's really just talking about it. And we're getting a few fades here around moving averages as seen here and here. I'll go down to a smaller time frame so you can see it a bit better. Clearly demand is coming in to support it around these moving averages. I didn't actually trade it unless I see a bigger fade that really comes out here and wipes out this and then immediately shoots right back up on larger volume. I might not buy it, but if it bases again, then I certainly will be trading this one, as it's proven to be quite good. This is only the first base as well that I can see. And typically, stocks that are in uptrends that do like to form bases like this, we usually do around 4, max 5, something like that. It's only done 1. I'm going to be watching this one closely going forward. MAD, Matter Group, still forming a base here. Again, it's looked like it's broken out here before, but it didn't. This is where stop losses would have been, so it's broken out, come down, hit everyone's stop losses, and now it's heading back up again. If we get a breakout of this area here, that's where a lot of people are going to look to pile back in. So set your alerts above this. Again, I'm not recommending you do anything. However, if this area gets broken out here, there's a lot of trap people who would have got stopped out here who may look to buy in around these levels. You also have to keep in mind that this is a cheap base. All these people who bought in around here and immediately sucked back down here, they probably haven't sold it yet. And the institutions that know this, they know that if they just push the price up, there's going to be a ton of sellers here waiting to get out. Whereas if I form a bit of a base here and let it drag on for a while, all those people with their orders around here or waiting to sell are going to be impatient and they're going to sell in here. And why would I buy up here at an expensive price when I can buy down here at a much better price? This is something that I've seen over and over and over again play out in markets, and that's why I like to watch these ones. GTX getting very tight now. Not really seeing anyone talk about this. If I go on the weekly, multiple weeks tight price action, low volume except for last week. I'll be watching this. If I get some sort of a breakout around resistance here, I may consider trading it. Next up, I've got AMD. Probably should have discussed it before when I went over semiconductor stocks. Like I mentioned in one of the previous videos, any sort of pivot points on this stock, it does typically tend to break out and do quite well. And I'm just saying that on my experience. I remember throughout 2021, probably had about 7 or maybe even 10 trades, somewhere around that, where pretty much all of them went very well, just for some reason that whenever it gets any sort of a pivot point and in a breakout, there's just a lot of demand that piles in for it. and it's done quite well on this previous pivot point that was formed here. So again, I'll probably continue watching this one for the meantime. Next up, I have IoT. Stock's clearly been in an uptrend and has broken out here on an earnings. We are in earnings season at the moment, and typically whenever I see a power gap on earnings, and what that means is that a very positive earnings announcement comes out and it gaps out of a base on very high volume, showing that there's clearly a lot of institutional demand to get in this stock. I really like buying these ones. What I've highlighted here is a demand area, and that's why it's always key to have these up on the chart and to keep them there. It's forming a base now on top of a base. If I get some sort of a fade in this area where price comes down, touches it, and then comes back up, again, that's going to show me that there's a lot of support for this stock if it does head lower, which would coincide to this power gap earnings that we saw as well. Any sort of a fade of this demand area, I will be looking to trade. Marvel, MRVL, formed a pivot point here and broke out of it on a gap as well. Pulled up to the distribution area here on nice volume, pulled back on low volume, and then broke out to it, and it's continued to head up higher. So closed on its highs as well on Friday. This would have been very nice to trade. I personally didn't because it is US stock and it's hard to trade and keep up for all of these ones. PNV, an Australian stock, a bit of a darling of the ASX as well. A lot of chatter about this stock. Whenever it tends to do well, a lot of people like to pile into it as well. It's done 9.78% today, so nearly 10% on the close, and closed on its high as well. This is also a very nice stage 1 base or inverse head and shoulders pattern as well. I'll pull up the awesome oscillator here. We've got the neckline here, left shoulder, awesome oscillator makes a new low. Then we've got the head, price makes a new low, but the awesome oscillator makes a higher low. And then we've got the right shoulder here, and we've got a breakout. I'll put the neckline here. What would make me want to trade this is if we get a move here. I'll put it up on the chart here. If I get a move up, pull back, consolidation, something like this, and then a breakout. That's what I'm going to be watching with Polynova PNV going forward. Next up, I've got ACE, an ASX stock. Got an IPO base. Since here, it's just been basing, and now this looks very nice. Now, the chart looks a bit ugly because it's not very liquid. It's only a 100 mil market cap stock, and it's only recently IPO'd. But this right here is a pivot point. Price goes up on nice volume, pulls back on low volume. Now we're just effectively waiting for that breakout. Probably going to be pretty hard to scale in to this stock, but if you are trading with, smaller amounts, then it may be possible for you to do it. But if you're trading with larger amounts, like like half a mil, couple mil, probably going to be pretty hard to trade this one. Next up, I've got Marathon, Petroleum, MPC. These are all oil stocks, they're pipeline stocks, and they're all doing quite well at the moment. My theory is that given all of the chaos in the Middle East right now, there may be disruptions in oil production, especially if you couple it with what's going on in Russia and Ukraine right now. You also have to consider it's very likely Trump's going to win the presidential election, and he obviously is very favorable towards oil production and pipelines and what have you. There's probably a lot of institutions getting in now before we see the election in November, because as we get closer to November and it becomes more and more likely that Trump is going to win, you're going to see these stocks get higher and higher. This kind of reminds me, I remember when there was that news coming out, I think it was like 2 years now, where China was stockpiling coal. When that news came out, yes, all these Australian coal stocks are doing quite well, but I remember a few months before that, all the stocks were basing and starting to break out, and no one really knew why all these coal stocks are doing well. But then a few months later, it comes out that China's stockpiling it, and that causes all the retail to jump in. That's what this reminds me of right now. I'm seeing all of the oil stocks do very well, even though the price of oil is doing shit. But all the oil producers and the pipeline stocks are doing quite well, and we'll probably continue to see this as we build up to November this year. So this is MPC. If I go to the next one here, which is PSX, it's also doing quite well, but similar for PAA. And there's many Australian stocks that I could go through as well, and other ones as well, but you get the picture. I really just wanted to convey a message, and hopefully it makes sense to you all, and you can choose to do it whatever you want. Next up, I have Atlassian. Similar to what I've discussed before, you've got a stage 1 base, and it's broken out of it now, and now we're getting a consolidation. This is something that I'd be looking to trade. This right here as well, you got a distribution area and a pivot point here. This was something that you definitely could trade because it is above all of its moving averages. And then this consolidation here, so I'll be watching this very closely as well. CALM or CALM, exactly what I've discussed already. Inverse head and shoulders here, left shoulder, price makes a new low, the oscillator makes a new low. got the head here, price makes a new low, the oscillator does not. Then we've got the right shoulder and we've got a nice clean breakout here, pulling back towards moving averages. I'm going to wait for a consolidation and perhaps trade it if it's decent consolidation and a decent breakout. Next up, I've got WSTRF, a uranium stock listed on the American Stock Exchange. Formed a very nice pivot point around its distribution area. Again, this is a cheap base as well, where you've got price comes up, goes to highs or 52-week highs. A lot of people would have rushed in to get in there, and then it's immediately reversed. So all these people who bought in around here, we've all done it. It's a psychological nightmare where you say, okay, I'll sell it, but when I'm at break even. And the institutions, they can see all those orders there, and they go, okay, why would I buy here when I can buy down here? It's almost like a magnet. They'll form like a base. They'll get impatient. They'll sell in there. You get that pivot point, and it breaks out and heads out to the upside. Why I like this one as well, if I look at the financials, it's actually doing quite well. You look at this. So last year we did 269,000 revenue. Well, actually 2021 they did 269,000 revenue, and then last year 2022 it's on 7.5 million in revenue. So that is a massive move in revenue numbers. Clearly there is demand for uranium producers right now, and this further backs up the theory behind why uranium stocks are doing quite well at the moment. I did discuss that there's always one good uranium pump every year, and there's always been this narrative and everyone dives in and then it goes to shit. If you look at the charts, they're all kind of in downtrends. But there is a bit of a theory, and there's more and more starting to back up that there is demand for uranium and that it is going to be used globally to fuel all of our electricity needs while also being carbon neutral. Hopefully everyone's on board at some point, governments and what have you, but I just wanted to show this one because the revenue numbers are quite interesting. Next I've got GTHX. This looks exactly the same, maybe not exactly the same, but very similar to the stock I just showed before. See how it's got this distribution area here and it keeps fading it? If I go back to the uranium stock that I just talked about, see how it keeps fading this distribution area? Comes up, heads back down lower, comes back, gets faded, goes back down lower, comes up, gets faded, goes back down lower. It's showing you that it's not ready to go back to the upside. There's still sellers in there. These sellers here, again, the trapped buyers that I told you before. But then when it's able to actually break through a clean on nice volume, it's showing you that those sellers, they're exhausted, they're not there anymore, and now the demand can finally start taking it higher. And that's what we're seeing on this one here. You've got that distribution area, all these people here, these trapped buyers, they're looking to sell, and it comes up, price pokes its head out, but it gets pushed back down lower because there's sellers there, and it's just done it recently. So it's telling you, hey, I'm not quite ready to actually get up just yet, and I'm going to wait for it to base a bit longer. But if it actually closes above this on decent volume, then the sellers are probably gone now and the buyers can finally take price higher. And lastly, I've got GLOB forming quite a large inverse head and shoulders. I go on the weekly, it might be easier to see. And right here, you see what I'm talking about. Let me just zoom out here because this looks a bit shit. Got the left shoulder here, price makes a new low, oscillator makes a new low. Got the head here, price makes a new low, the oscillator does not. And now it looks like it wants to break out. So if I go back down on the daily, it has looked like it's broken out, and it's actually forming a base on top of a base, or a very nice pivot point here. So I'll be watching this one going forward. I'll be waiting for it to contract and go sideways for a bit longer, and then waiting for a big breakout here, clearing all of this on a lot of volume. That's all I really wanted to go through. Again, if there's anything you want me to cover, just comment down below or send me a message. Happy to cover any stocks or any asset classes that you want going forward. Thank you.